today we're going to go over how to invest in startups and small businesses using a self-directed IRA. My name's Aaron Halderman, Chief Operating Officer at Directed IRA, joined by the illustrious Nate Hare.
I knew it was coming.
He heads up our business development and retail sales channel, industry veteran. He likes to think he's a baseball veteran, but he's a self-directed IRA industry veteran.
Another lifetime ago.
So we're excited to have that. And we do have a special guest, Mr. Jeff Schiefelbein, all the way from Dallas, Texas, but he'll be joining us remote. So we're excited to introduce him and hear his story and his successes. As always, if you're interested in opening up a self-directed IRA or solo K, or have questions on how you can get started into self-directing your retirement account, just book a call. Just go to directedira.com. On the homepage, you can book a call. In the upper right-hand corner, you can book a call. It's a free informational session. We'll answer your questions, and the purpose is to open a new account with us.
And I think we've got Michelle on the line. So if you're looking to touch base with somebody today, she's there. She can answer your questions. We always like people to have a call because you can answer all your questions. Also, you can check in with our different promos that we have. So we're usually running different specials to get you guys into a self-directed IRA. So make sure you scan that QR code or just go to directedira.com and schedule that call.
This is exciting. We have over 100 plus people already on live with us. So this will be great.
Yeah.
So be sure and put your questions over in the Q&A. If you by chance don't like to follow instructions, you can put them in the chat, then we'll view that as well.
And give us an idea. If this is your first webinar, type a 1 in the chat. But if this is your second or third or fourth or 100th, throw that in there as well. We like to see who we have as newcomers, and we're always welcome to repeat viewers as well.
I love some of your names that you put in the chat too. They're just alternative names, and we are not saying some of those out loud. And you know who you are. You know who you are. Okay, so we do have a couple upcoming live events this year planned. They're already in the works. We do have the dates. The websites are being updated, so stay tuned for some updates there. We'll send out email updates. But the SDRA Summit will be virtual only this year. It'll be April 17th. We're going to do it out of our studio here.
So everybody can attend.
Yeah, and we do have a special offer that if you're a client, I think I can say it now. Can I say it now?
Sure.
Okay.
You already started.
Okay. If you're a client of Directed IRA, you can attend that for free.
Oh,
okay, so don't have to pay anything for that. It'll be free. We do have a special incentive to make sure you show up, where I think we'll offer the recordings as well. All you have to do is show up, and we'll also give you the recordings for free. We do have the Alternative Asset Summit. That will be in Southern California, October 22nd, 23rd, altassetsummit.com. And that will be mainly in person. We haven't decided if we'll have a virtual option or not, but plan on that one being our only in-person networking event, and all things alternative assets to invest, a self-directed IRA, 401k, or even your own personal funds.
And I'll just give you guys an idea. That event sells out every single year.
Yes, sir.
Every year I have people coming to me the last 1 or 2 days before the event and say, Nate, do you have any tickets left? And I always have to say no. So when you guys see those announcements that the alternative asset especially is coming up, that's a limited space only event. So we purposely do that to make it more intimate, high pH level. It's great networking. So when you guys see the announcements come up for those events, make sure you jump on those.
Okay, what else do we got? Oh, okay, so I'm going to turn it over to Nate. He's going to give us some basics on what we're talking about today. Then we'll roll into our first case study and guest speaker, and that's what we'll do, and then we'll call it a wrap.
Yeah, thanks, Aaron. So This is just to lay the foundation of what we do at Directed IRA and how we can help people who have a retirement account who are looking to invest in things other than just traditional stocks, bonds, and mutual funds. Now, for all the ones I saw a ton of ones. That's
great.
A lot. Yeah. Just so you know, the IRS tax code doesn't prevent us from investing in almost anything when it comes to our retirement plan. And when we talk about retirement plans, we're talking about our 401ks, even our 403bs, our 457 plans, our TRS, our TSPs, our IRAs. There's really not a lot of restrictions as to what you're allowed to own inside these plans. But most people are just familiar with stocks, bonds, and mutual funds because most people, 98% of people that have a retirement account, they have it with the big guys, the Fidelities, the Charles Schwabs. Those companies are licensed custodians. They hold your retirement assets just like directed IRA does. The only thing that's different between Fidelity and directed IRA is they also sell financial products. They sell investments. That's the way that they make most of their money. They get commissions and broker fees. So if you wanted to invest in, let's say, a small business that's not publicly traded, or a piece of real estate or rental property, or maybe do a private loan to an investor, Fidelity won't facilitate that investment, not because you're not allowed to do that, it's because they don't make money on those investments. So the alternative is us, directed IRA. Now we're a licensed custodian just like Fidelity. We're licensed to hold assets inside our clients' retirement accounts. But the thing is, we don't sell investments to our clients. So when we have an account agreement with you as our client, our account agreement says invest in anything the IRS allows, but you got to tell us what the investment is. We're not going to sell it to you. So the spectrum of investments is much, much larger. You get to invest into what you know best, and you get to invest in what we call alternative assets. Now you can see some of the alternative assets that we hold here at Directed IRA. Those are the most common. A lot of people like to own real estate in their self-directed IRAs, cryptocurrency, precious metals, gold and silver bullion. Private businesses is a big one, which we'll be talking about specifically today. But when you look at the tax code, the IRS just says they don't want two investments in a retirement account: life insurance contracts and collectibles. That's it. So if you go to your Fidelity guy or you go to your Charles Schwab guy and say, hey, I want to buy real estate in my IRA, or I want to invest in this small startup, they're going to tell you no, but it's not no by law. It's no because they won't do it. So if you're interested in investing alternatives, you just have to have an IRA with a company like us. Now, I will say this, most of our clients have an IRA here at Directed IRA that'll hold their alternative investments, but they also still keep an IRA at Fidelity or Charles Schwab to hold their traditional investments. That's the key. You're not limited to how many IRAs you're allowed to have. So most of our clients just move money back and forth between their traditional IRA at Fidelity and their self-directed IRA to invest in what they know best or invest in alternative assets. And that, I think, gives you better true diversification.
Another strategy that I personally do is I have two HSAs. I have one that's over at Fidelity, invested just in the S&P 500, but I also have a crypto HSA at Directed IRA that's invested in various cryptos. So you can do that as well. So you can have multiple types of accounts and diversify between both publicly traded assets and alternative assets as well. I did have a few questions come in just about Directed Trust Company, and there's a lot of people that are new here. Directed Trust Company is a licensed and regulated self-directed trust company. We're governed and examined by the Arizona Banking Department of Financial Insurance and Institutions. It's AZDIFI. Is the acronym for that. And so we're licensed, regulated, examined by them every year. Only banks, credit unions, trust companies, and broker-dealer approved by the IRS on their website can custody retirement accounts. So we're a trust company. We're very regulated, audited every year, examined every year by the AZDIFI. We can't take any of our clients' money and invest it. We're even governed on what that can do while it's just sitting there before you invest it. So very regulated. Don't have to worry about any issues there, before you've invested your account. So it's not like a traditional fiduciary where there's, different things that we could do. We just can't do it. It has to stay liquid.
Yeah. So basically what you use us for is when you want to invest your retirement account into alternative assets, you use us as the custodian. Now, what types of accounts do we have here at Directed IRA that allow you to invest in these alternative assets? Well, we've got 6 here on the board. And just to break down the misconception, when we say self-directed IRA, when you hear that term, self-directed is just a marketing term. It's not a type of IRA at all. Self-direction, or that term self-direct, just means you have to tell us what the investment is. But the account itself is no different than your traditional IRA at Fidelity, your Roth IRA at Charles Schwab, your SEP IRA at Wells Fargo Advisors. All the account types are the same. An IRA is an IRA is an IRA. We just have to tell you to self-direct it by telling us what the investment is. Now, we do have 3 categories of plans that can be self-directed. I will tell you, I've never met anybody on this planet that can prove to me they only need one plan, because all of these plans, by definition, are tax-exempt trusts. You're the fiduciary of the trust. You put money in as a contribution. You tell the custodian what you want it invested in, and all the gains come back to the plan, either tax-deferred or tax-free. But there's different categories that fit different needs in life. For instance, if you look at the personal plans, traditional IRAs and Roth IRAs, really anybody can have those plans. Anybody can make a contribution to a traditional or Roth IRA as long as they have earned income. The reason I say that is we have a lot of minors that have minor Roth IRAs. I have a 9-year-old client with a $75,000 Roth IRA, helped by her grandmother who invests it for her. So personal plans, again, anybody with earned income can self-direct or contribute to a traditional or Roth IRA and self-direct it. Now, if you're self-employed, you can be a W-2 employee. You can also have some self-employment income. Anybody with 1099 income, Schedule C income, side hustle, real estate investor, all that. You can also contribute and self-direct SEP IRAs, or my personal favorite, the solo 401k. Now, we've got some special classes on this online. If you go to our website, we've got a ton of education on the differences between these plans. We're just touching on the different types of plans that you're allowed to have here at Direct and IRA. And again, I challenge anybody to call me and prove to me they only need one. So those would be your employer plans that can be self-directed. And then we even have non-retirement plans that can be self-directed that grow tax-free or tax-deferred, mostly tax-free. And that would be your self-directed health savings accounts and self-directed Coverdell education savings accounts. Now, these are for your kids. You usually set them up as minors. Think about it like a 529 plan, but you're not limited to just government bonds. You can invest into alternative investments. So when you back up and look at this airplane view, you have plans that can facilitate your retirement with tax-free income and tax-free growth, but you also have plans you can self-direct that'll help you cover healthcare expenses with tax-free dollars and education expenses with tax-free dollars. So if you're a husband and wife and you've got kids and you've got medical needs, again, I would probably urge you to talk to one of our IRA account executives and see about self-directing as many of these plans as you can, because the more money you get into these plans growing, the less Uncle Sam can tax you at the end of the day.
What else do we have?
I was just going to go to the next one. So the process, you want to touch on this?
No, but I will when we get to fund your account. But let me hit on some of the questions. Boy, y'all just get so hot to trot on crypto, and that's cool because it's always making waves. And I know there's some announcements on the, what the IRS is looking at, what the SEC is, de-risking it. We do have a crypto product offering. So you can do any type of these accounts, whether it's a personal plan, employer plan, a specialty plan. We also have a crypto option for each of those. We have a partnership with Gemini, so any cryptos listed on Gemini's site is what you can invest, both buy and sell. So I think they have like almost 100 coins. I think it's 80 plus, 90 plus, somewhere around there. If you want to go hold the keys, do cold storage, we do have an option for that. You would have to have an IRA LLC or a solo K plan. Those would be deemed institutional plans, and we do have that offering now. So if you have that structure in place or want to get it in place and you're wanting to diversify into crypto and hold the keys, move off exchange, move into cold storage, we do have that as a separate offering. Alternatively, if you just want to stay on exchange with Gemini, you can do that. That's a crypto product and you can have both a regular HSA and a crypto HSA. And so just want to get that out there. XRP, Solana, ETC, BTC, they're all, ETH and BTC, they're on there as well. So whatever's on Gemini's platform. So wanted to hit on that, and now let's talk about how we can get these accounts open.
So good question. So we've covered what you can invest in with an IRA or a self-directed retirement account. Again, almost anything. Types of plans that you can self-direct and own alternative investments. Now, how's the process actually work? So if you broke it down into 3 easy steps, it's open account, fund account, invest account. Opening account is as easy as going online. Again, it takes 5 minutes online. Pick the account that you're intending to open, or just call one of our account executives and they'll just walk you through the application over the phone. Takes it's very quick. Once you get the account open, then you fund the account. Now there's 3 ways that you can fund your self-directed IRA. The most common way I would say is probably IRA to IRA transfer. So let's say you've got a Roth IRA at Fidelity, you open a self-directed Roth IRA here at Directed IRA, you fill out a transfer form with us, we tell Fidelity how much you want to transfer, whether it's 50 grand, 100 grand, 10 grand, and that money just comes over as a wire as an IRA to IRA transfer. There's no tax reporting on transfers. You can move money back and forth between an IRA at Fidelity and an IRA here as much as you want. So that's one way that you can fund or put some money in your self-directed IRA. Second way would be rollovers. Now, rollovers are just a different way to move money between retirement accounts, but it's usually when you have a 401k at a company that you've worked with. Maybe you've left that company and now you have the access to roll that into an IRA. So rollovers into self-directed IRAs would be the second way that you can fund it, or you can just simply make a contribution. You can just make your annual contribution just like you make a contribution anywhere else. So open account, fund account. Now here's where the new part for most people will come in is how do I invest this? How do I get this into a private business? How do I get this into a real estate deal? Okay. Well, we've made it pretty easy. Our Directed Connect portal now gives you access to just submit all of this online. So once you get the money in the account and you're ready to invest, you're going to choose the type of investment. Again, we're not selling you the investment. You're just choosing the type of investment. You've got to locate the investment or figure out what the investment is, whether that's real estate or a loan or a private business. You select the type of investment and you're going to submit that to our team with some supporting documentation. Okay? Now the supporting documentation can change, but our 5-star investment team will walk you through that. But typically, let's say we're investing into a private business, there's going to be some documents that are going to show that your IRA is going to be a subscriber or an investor into that business. So we just need you to dictate which investment that you're doing and then give us the supporting documents. And we usually work with the investment sponsor to get those supporting documents. It could be a PPM, it could be an operating agreement, it could be just a purchase contract. So we're always going to get instructions from you, pushing a button telling us what we're investing in, and then show us what the investment is by giving some supporting documentation. Now, we're oversimplifying it because we can get into the nitty-gritty on specific types of investments, but I will tell you, our investment team is by far the best on the planet.
They're awesome.
They get investments out within 48 to 72 hours. They're very communicative. If you look at online, Google, we've got the most 5-star reviews for our investment processing. And that really is the only thing that really sets us apart from competitors because the product's the same, the services are different. So that's all you got to do. Open account, fund account, go into your client portal and tell us what you're going to invest in.
So that portal is actually, that's a screenshot from my account. I just kind of blurred out the vesting and titling of my account number and my personal email on there since this is shared everywhere. But this is like this is a screenshot of the portal of when I'm logged in and I'm self-directing too. So what I'll say is this, because I know some of you just started, this is your first webinar. A lot of you haven't even funded your account. Don't sit by the sidelines. Get in there, fund the account, because it takes a little bit to get in there, especially if you're doing a rollover. If it's a transfer coming from Fidelity or Schwab, that may take a couple days, maybe a week. But if it's a rollover, it could take a month. Your old third-party administrator, they're probably going to mail you a check. And then you got to mail that to us. And then we have to deposit it and wait for a clearing period for it to then post to your account. So if you fall in that bucket of a rollover, don't wait. You don't have to move the whole thing over. If you got a couple $100,000 in your old 401k or even an IRA, just move a portion of it over that would equal an investment that you plan on doing. And so you're ready to go. If you're like, oh, I don't want to sit in cash, we have some options. We can buy a stock or mutual fund on your behalf with the account, and you can, it's easy to then sell that and then self-direct it after, but at least you have money in the account. So don't sit on the sidelines. Please get in the game. You could miss out on opportunities. We hear it all the time, and then it's like a fire drill trying to get the account funded because you got a great investment. Like I even had to plan ahead. I always like to do a Roth conversion at the end of the year for my 401k. I do that at the end of the year. Then I have the money ready. I send it to my bank account because I do a 401k LLC structure, which is a whole other thing. If you have questions on that, just please book a call with one of our account executives. We can walk you through the checkbook IRA LLC solo case structure, because then you're doing the investment yourself. You're bypassing us as custodian. We still hold your retirement account as custodian, but you're doing the investing yourself and not going through us. So you wouldn't necessarily be working direct with our investments team. So don't sit on the sidelines, get in the game, get the accounts funded. You'll be doing yourself a favor. You won't miss out on that potential real estate deal or that small business opportunity, which brings us to our next slide. And we're about to bring up our guest speaker and case study, which we will be talking about investing in private small businesses. We almost have a couple hundred people live. And why this is exciting is while we don't have our own network of investments or offer investment advice or give investment advice, we do not do that. You have to do your own due diligence on your own. We're not, saying what to invest in or this is a good deal. That's on your own. That's our disclaimer for that. But what we do is we have special guest speakers that have an area of expertise, and they share their case study and due diligence. If you want to get in contact with them, you can, and they have deals. And so that's what we do from an educational standpoint. So, all right.
Yeah, and this is a good lead-in because this is why we're so passionate about this. At least for me, I didn't even know self-directed IRAs were a thing. And I was investing into real estate right out of college. So when I found out one day that I can actually invest my retirement account into real estate where I was making more money, I thought, no more people need to know about this. And how come everybody doesn't know about it? Why aren't we taught this in school? How come my advisor never mentioned I can do this? Well, truth be told, if you look at the numbers, again, numbers don't lie. The rich and the wealthy have been using self-directed IRAs to invest in alternatives since the mid-70s when IRAs were created. Again, back in the day before the internet and before you had webinars where you can look at people or look at investments, it was kind of a good old boys network. You had to know somebody. You had to be in the know. And if you look at the numbers even today, when you take the average American retirement account, the average American retirement account has less than 5% of their assets in alternatives. Okay, that's as a whole. The average American has less than 5% of their assets in alternatives. But when you take the retirement accounts of millionaires, okay, net worth of $1 million and above, 22% of their assets are alternatives. And it doesn't stop there. When you look at the ultra wealthy, their retirement accounts, ones that have net worths above $30 million, the alternative asset makeup in their accounts is well over 50%. And I always like to pull up this article. It's an older article, but it shows you the narrative they try to give us on retirement accounts and that they should just be invested in the market. I saw this article in March 2020 in Forbes. It said, got alternative assets in your IRA, watch out. Now, obviously, I was in the business, so I had to read this article. Now, the whole purpose of this article was not that self-directed IRAs or alternative assets were dangerous. It's that the IRS was on a mission to find out what's in these self-directed IRAs and how come the balances in these self-directed IRAs is much higher than the average person. So even in this audit back in 2020, they found that IRAs valued above $5 million or more had about 25% of their assets in alternatives, and everybody less than 5 million had less than 2% of their assets in alternatives. So we just want to throw out the numbers. We're not pitching alternatives to you guys, but I will just tell you, the numbers don't lie. Alternative assets could be an investment vehicle that you're missing in your retirement account. And that's a good lead in to bring in Jeff and talk about his alternative investments and maybe how his path on how he got into this business.
Welcome, Jeff Schiefelbein. Let's see that Smiley face. There he
Thanks,
is.
Aaron. Thanks, Nate.
So we're excited to have you on. Jeff and I, oh gosh, I guess not dating ourselves age-wise, but we've known each other for 20 plus years now.
Can I say this is the first time I've been on a webinar where I was actually jealous of the guest studio?
So we're excited to have you on today and to share some of your experiences in your journey. Just to give everybody that's listening in live and those that'll be on the recording, we will share out the slides. This is being recorded, so we'll be able to share that out too. And if you want to get in touch with Jeff later, we'll have his information up there. But what we've asked him to do is share his story and background, from his entrepreneurial start and just kind of nature as an entrepreneur, from going from then corporate to entrepreneurship to business owner, and now helping small business owners and how you can use self-directed IRAs and solo Ks to participate in things that they're doing and opportunities they're looking for. And he has a special case study on a recent deal that they just wrapped up in Q4 last year, of which I'm investing my 401k LLC that I self-direct. And so I'll be a part of that. And I'm always looking for deals myself. I primarily lend and do real estate, but when I see opportunities in private businesses, small businesses, and really looking at the leadership team involved, that's one of the things that helps me make a decision. So welcome, Jeff. I think you have some slides that you're going to share with us, right?
I do. And I got to start off by saying that I've learned more about how to think about my IRAs differently through the relationship I've had with you and studying this. So thank you to both of you. I think sharing this information is incredibly valuable. And for the opportunity to come in and talk about my experience, a little bit about my background, and then the case study is just a blessing. So for everybody involved, especially Nate and Aaron, thank you very much.
Absolutely.
Yeah, I do want to share for you a background for everybody listening. And it's critical when we do this because we are always, when we're making the investment, we're making kind of the vote, the yes vote. It's never just on a concept, right? It's never just on a return, because some of the greatest concepts never come to fruition or just have that plateau. And it's often because of the people and the culture, the leadership that's running it. So I do think it's critical that you know me and that you know my background as I share with you how I even think about using a self-directed IRA investment and what I'm doing with small businesses. So by way of background, yes, that's me. Yes, all of those are my kids. And even the woman right next to me that looks like she might be a teenager is actually my wife. So it's 7 children, if you're counting. Um, I have, though, bags under my eyes that are so big that often people ask if all 8 of those kids are mine and what it's like being a grandfather to this many children. So age is a real thing, Aaron, and I like your haircut. It shows our age pretty well, too.
It's a good haircut.
Yeah. So, for me, I just want you to know that I always want people to realize that the things that matter to me the most are the things that define me the most. So my faith, my family, and then this like building culture, using every day to then go invest in the lives of other people. And this idea that we can truly have an impact every day when we wake up on the people around us that are in our spheres of influence. I'm currently the co-founder and CEO of Undivided Life. We'll talk more about that in a minute, but think of this as an advisory firm for growth, culture, and really helping people to build organizations that last and that matter. And I'm also the CEO of Howdy Homemade Ice Cream, and that's a teaser. It's a delicious teaser for what's going to be coming up next. So why all of this matters to me and why would I share this for you? I just have this fundamental belief that our businesses should support our full and integrated life, not be in competition with it. And I'm going to just challenge everybody because I get a chance to speak to you here and on the recording. If anybody ever tells me I'm crushing it at work, but I'm suffering at home, I don't think you're crushing it. I think we're called to be fully integrated human souls. And so I just encourage people, let's live rich lives on all fronts by being fully invested, all in. And when we have issues, finding the resources to overcome those. But this fundamental belief about the dignity of the human person and even how work helps to form the human person and create this amazing opportunity for creation and for contribution has shaped every single organization that I've ever built or done a turnaround, or the ones that we've gotten very heavily invested in. So I am a graduate of Texas A&M University. We are an obnoxious bunch, but we stick together pretty well. And entrepreneurship for me started really early. I can remember seeing my father leave a very long-term corporate career to become his own consultant. And I was probably 12 years old, and it piqued my curiosity. And then as I entered A&M, I realized I had that ability to galvanize, maybe the Tom Sawyer gene, if you will, and that if I could point it towards things that mattered, I could turn that into business enterprises and into nonprofits. So the very first thing, legitimate organization or company I ever launched is a 501c3 that's at Texas A&M University. So to rewind the clock, I was a very outgoing young man at Texas A&M, and I also had convinced myself that I might be invincible, and I got in some trouble. I ended up making a mistake. And through this amazing moment where I was inspired, I realized that my mistake, where I had been arrested for a driving while intoxicated incident where I was guilty, could actually be turned around on its head. And I could use my story and my skills to create something better for the people around me. What's really cool is that I went on this journey, and it was the hardest 12 months of my professional career. And I did this while I was a junior in college. And I launched a student organization that's also a 501c3 nonprofit corporation, and ended up getting hundreds of students to go through interview application process to become our employees or our members. But instead of paying them, they paid us. And we were able to convince every single stakeholder involved to let us go and build this thing. It quickly was recognized, and still today is the largest and most effective program to reduce drunk driving in a college town. And within a few months, I started down the pathway of franchising that model and bringing it to people all over the United States. For that work in College Station, now 27 years later, over 300,000 people have used that organization to get a safe and free ride home. But Aaron, I think what's so cool, and you knew me back in those days, right? It was like I was doing work that was impacting people's lives, but I was
Yes.
being taught like a method of doing work. This this fundamental, like if you build the right architecture and you put this crazy business acumen where you surround yourself with experts and you have purpose and you have aligned values and you unleash people, like we're going to be highly aligned and loosely controlled, then amazing people around me did great work, and I was just part of the team or part of the vision casting. I wasn't all things to all people, and the success of that continues today as that program is still running in all of those different schools, but especially at Texas A&M. Did you ever use it, Aaron?
No, I went to Texas Tech, and we did not we did not have it there.
I thought maybe one time you got in a car with me, so
No, I did. I did there.
I think I drove you home. So listen, I do want to talk about how that starts like turning into my corporate experience. After college, found my way into a new industry that was launching in Texas and in other parts of the United States, deregulated electricity. And what was really neat was it was such a brand new industry that I was brought in at this very low level, and they said, figure out how to do this part of the industry. And they didn't know what they were doing. I took the same playbook that made Carpool at Texas A&M such a success, and I implemented it throughout this new company, First Choice Power. And what it led to was this unlock where we were starting to attract some of the best talent in the industry because they wanted to be part of a place where people were joyfully doing hard work together. And then it started leading to breakthroughs in technology because people were sharing information, not hoarding information. They knew that if information was power, then sharing information was powerful. And then we went and basically created a culture and a movement that led to explosive growth. That company, I was serving as the vice president of commercial sales. We were a subsidiary of a publicly traded entity. And when they decided that the market was right, we should go to get a valuation and be sold, hoping to sell for $200 million. The final price tag was $300 million. And the purchasing entity noted in the negotiation, they knew they were paying a premium for what we had built. And, there's a couple thousand employees connected to this company, But it all came back to the division that I was blessed to be running when they said it was the growth of commercial sales, where I was the VP. It was the technology we built that was only possible because we had people stop worrying about fighting for position and I'm great and you're not. And we had people focused on the same like meaningful goal. And then the last part, they said, your culture is unlike anything that we've ever seen before. So it sold for $100 million premium. And then this really neat shift happened called I took one day off from work when I left that organization. And I looked around and I was trying to figure out how can I create the right future for myself where I'm in mission aligned, values oriented, culture first organizations with this fundamental belief that it's not this culture's nice when things are good and it's HR is going to have this fun culture.
Mm-hmm.
Nate and Aaron, I don't care if people have fun at work. That's not my goal. But I will create organizations where work is meaningful, it's challenging, it's dignified, and you're given real responsibility. And then you create and forge friendships in that kind of battle to do great work. And you know what the outcome is? People have fun at work. So it's not the purpose, it's an outcome that shows that we must be doing something right. After that one day I took off from work, me and several of the other executives from the company that we had just sold started a company that we literally called Five, just the digit. And we became, instead of an energy supplier in electricity, an energy broker and an advisor when it comes to the way people use and monetize their energy assets. They brought me in as, you'll appreciate, the youngest, the poorest, the dumbest, but the coolest of all the partners. They knew that I had some certain thing they didn't have. And they said, build a culture and let's start recruiting. If you can get any of these first 10 people to say, yes, we got a company. Brother, all 10 of them said yes, and we were off to the races. What we built was a culture first organization. And what was so neat about building it this way, the greatest talent kept showing up. And again, just like in my carpool days, I was told over and over in that industry, what you're doing probably won't work because it's different than everybody else. Like, why don't you go along to get along? Just build the same thing as everybody else. I said, no, we're actually going to build a place where culture, strategy, and people are considered three strands of the same strong cord. And then we are going to be very intentional about all of this so that even not just the clients are getting a better service and not just our employees, but even the industry, right? The suppliers and vendors and our competitors would be better off because we're going to build a better future for the deregulated energy industry. We won every year since launching this company in 2012 awards for growth, culture, innovation, leadership, compounded growth, best places to work, innovation over and over and over. I actually left that company 3 years ago to answer a calling that we'll talk about here in a minute. What's great is I was also able to be a part of a successful exit as a VC firm came in. They doubled the valuation that we had marked ourselves at internally when I was leaving. And that company continues to thrive. And it's just reinforced this conviction that I have all along that when you align these things, you can compete with what's possible instead of competing with the other people around you. The kind of shift into what I'm doing today, this movement into undivided life, and think about this undivided life. I've already told you how important keeping the priorities and this integrated approach matters to me. It's allowing me today to identify small and medium-sized businesses where we see the leadership potential or this momentum around the people that we trust in there and the long-term potential for us to get involved. And then we partner with those people primarily through an equity ownership position, not through some sort of short-term speculation or a belief that we can just get in and get out. It's really about helping to leave everything better than we found it. It's like going to the state park. We're going to make sure that every organization we get involved with is better when we leave it than when we found it. In that taking equity positions, we also get this chance to work alongside these founders, create this value, enhance the mission, and make sure that growth is sustainable. It'd be really easy to come in and pull different levers and just get growth, kind of that ugly side of what a private equity firm might do. But I don't sleep well at night if that's the approach I'm taking. I want sustainable growth whether we're there or not, so that everybody is better off for us having existed. And then when I think about equity over other structures, brother, this aligns people's incentives, right? You don't want an investor having a different incentive than founders. All of us know that story. All of
Hmm.
us have high-fived our friend when they got an investment, and a year later they're asking you for a job because things went south really fast, right? This also supports something that I know that's important to y'all, which is this patient capital. Let's make long-term healthy decisions. Let's not try to beef something up so that it can be the vanity metrics. Let's build something that truly is game changing for every single person involved, including the ownership, and create this upside, right? Short-term pressure is the house of cards, and we've all experienced that too. And
I
then,
think this aligns
yeah, go
with
ahead.
Jeff on the whole reason like why we exist and part of our mission on people taking control of the retirement account, of which we own the trademark for that too, that other people use. You know who you are if you're listening. You
You
use
know
our
who you are.
trademark.
Don't you do that.
But in all seriousness, that is part of like our stance too. Is that's like kind of your nest egg. You're out there working. A lot of you have W-2 income or other self-employment income, and you're saving for a future retirement, and which may come sooner than later for some of us. And it's empowering for you to go in and to invest in things that you believe that you can control and not just be limited to stocks, bonds, and mutual funds. Those are fine. I invest in them too, but there's other things that you can do. And that's why we exist as a company, providing a real opportunity to invest in what you know, invest in things that you want to be a part of or have a belief in. And so it's exciting. And that is kind of that patient capital, long-term strategy and growth. There's some age requirements and restraints on that too. Typically well into your 50s, you can even access that without taking penalties. And so, it is a long-term plan and strategy. And it's exciting to help people and for even the service that we provide.
100%. I think you're going to help me buzz through a slide so we can get into the meat. But I want to share with you one thing really neat. When I started Undivided Life, my co-founder left an incredible private equity firm.
Mm,
It was a unique place where it was like private equity, but they still had a soul, a human soul. And they believed fundamentally that if we 10x the size of your company, the world needs to be a better place. It can't just be about the dollars and cents. It
sure.
also has to be about the human impact. And so both of us have this deep experience. Of course, he had looked under the hood at hundreds of deals every year as a VP in that firm. And then I had been a part of a lot of different transactions, both buy, sell. And in both of our experiences and watching some of the bad stuff that happens, we had this deep appreciation for the partners that can be long term in their mindset and thoughtful about it. So you've hit on a lot of this. I want to just kind of buzz through here. A founder and the story I'm about to tell you, when they're looking at what is possible for them and why this matters for y'all on this call, founders are often looking for that patient capital. Sometimes they don't realize it exists because they only know the bad side of the PE world. But if they found patient capital, aligned values, people that are along for the journey, that becomes very interesting for founders that really need that kind of life rope or that life vest so they can come back up to the surface and then grow, because a lot of times they've been deep into their organization. This gives us a long-term horizon. You don't have that pressure for where's my return, my liquidity moment, and a strong alignment for just the growth cycles of a business, right? Everybody knows the curves of growing a business, or hopefully you do, are pretty hard to stomach if you're looking for a short-term return sometimes. And then today, we're thinking about how founders think about capital, and I'm going to share the story of the very exciting one. You can see the ice cream cones already on the screen here. I'm going to explain how investors can responsibly participate. And of course, that's really your bailiwick. You guys are the experts in that, and highlight this importance of the structure, the compliance, the alignment that comes from you. Undivided Life, in a nutshell, has received either many awards through all of our exercises and organizations in the past, or what we're doing now. You get a quick look at the pedigree of who we are and where we came from. One thing I want to share with you, and I don't know if I told you this, Aaron, but the company 5 that I had started before that was winning all those awards, I was the chief culture officer. I architected this repeatable, scalable culture. Just a few months ago, in Fortune magazine, was named the number one place to work in America.
That's
We've been on the
amazing.
list before, the number one place. for any company with less than 100 employees. It just shows you this stuff is not built on the cult of personality. It's not built on just the galvanizer. You can repeat this over and over. That's what we're here to do with what we're going to tell you about next. Howdy Homemade Ice Cream, a company that now we're fully ingrained with, and I'm going to get into this, but I love this image because right off, I want to tell you Howdy Homemade Ice Cream. And the image that you see on the left is three of our heroes, each of whom has Down syndrome. And on the right, another one of our heroes that has Down syndrome. This is an organization that's serving super premium product, 14% butterfat ice cream, and employing adults with intellectual and developmental disabilities in front of house work, the most dignified jobs. And you're going to hear an unlock that is so beautiful and so mission aligned to everything I believe. It's definitely a winning recipe for sure. The leadership team.
Before Jeff, let me
Sure.
interject a few things. We hit on this, and as we go into this case study. So one of the things that we're going to continue to do on a weekly basis is we're going to have different guests on. We'll start off in the format that we're doing, talking about retirement accounts, and we want people to share their story, the different things that they're doing in the investment space, their background, their credibility, and give you some insight into how they're creating these opportunities to invest in small, medium-sized businesses or real estate deals or crypto deals or precious metals, whatever alternative investment it may be. One of the things that you can do is you can directly invest your retirement account into a small business, whether it's membership shares in the LLC, stock in a corporation. We'll process that directly. Alternatively, you could set up a checkbook IRA LLC or a solo 401k. You would then receive the investment docs from that particular investment sponsor, and you will execute and send the funds accordingly. So there's lots of different strategies and things to do. Some are like convertible notes. Again, some are like direct membership interest. Stock in the private company, et cetera. Some may have, come with a preferred upside. It may have a preferred return, and then maybe roll to a convertible note. So these are all different things that you could do. So what we're going to talk about today is straight membership interest into an LLC and what that can look like. And I'll kind of walk through that. Jeff's going to paint the picture of the case study now. I think it was critical to set this up because when you're investing in a private small business, how are you doing the due diligence? This is a question for all you listening in. Like you are doing the due diligence on the leadership team, the people that are managing that investment. So you better do the due diligence on that people and hear their background and their successes and what they're doing. Some of you might be like, well, I just want to get straight to the deal structure. And I get that. Hey, those of you that have a math brain, like myself even, you got the math science brain, you engineers, programmers. I totally get it. I'm like that. My father's a programmer. We just want to look at the numbers. But there's also a human element side to this. And a lot of these funds go belly up because the leadership can't perform or they got in a bind with some interesting bad debt. And so these aren't stocks and mutual funds. These are privately owned companies backed by real people that are operating these businesses. And so that's the due diligence that you're doing and why it's so critical. And it really bothers me when people bypass that and want to go straight into the numbers. Because if I don't know you, I don't know the leadership team, I don't know your credibility, some of your successes, some of your failures, I don't freaking want to do it.
Yeah, I'll add something. I always say this, that self-directing your IRA, it's a relationship business, but that's also why it makes it fun, right? Even on a lending, when you're doing a private loan, a lot of times for us who are doing private loans to real estate investors, it's less about the house, it's more about the borrower. So, and their track record, and do we trust them to pay us back if the deal goes bad? So Aaron hit the nail on the head. But this is what you guys got to realize is that this is a fun part of self-direction, is getting to know the people that you're investing in. And it's just not some nameless, faceless offshore mutual fund. So this is the fun part, but yeah, he hit it right on the head. This is a relationship business, so get to know the people that you're investing
And you
with.
can use any type of retirement account to do this. You can use an HSA, an ESA, a Roth IRA, an inherited IRA, a traditional IRA, an IRA LLC, a solo K. Did I miss any?
Nope.
A SEP. I think that's all. So that's why that's critical and why we want to give that waterfall approach and like what to look for. And so Jeff, I've asked him to share kind of the investment structure and strategy and what they're looking for and the waterfall outlook and the different scenarios there. We're just going to touch on it. If you have questions or want to, get into the nitty gritty details, we're not going to do that on this call. Set up a call with him if you're interested in learning more, and he'll go over all that. This is educational in nature to set the stage and background of what's opportunity and what's available to use and invest in with the self-directed IRA or solo K. All right, without further ado, tell us about Howdy, the Howdy mission.
Well, and let's not forget that the reason I called you, I was a week into this process of going through what I'm about to share with you, and a person who uses their directed IRA account
Yes.
made an investment in Howdy, and I
Yes.
saw the logo and thought, why haven't I called Aaron Halderman yet? So it's neat the way these things work. Glad to be here with you. Appreciate that member as well. Very quickly, I just want you to know that the team that we built, and if you saw the whole bios, people that left Wingstop in a strategy role like Cody Slape, people that run brands with millions of impressions every month in the digital space like John Heinen, my business partner Nick Besner, who left private equity, the CFO that came down from Denver to join us. You would actually think we built this team to go do what I'm telling you. We actually built this team, and then opportunities like Howdy came to us. Tom and Margaret, however, are the founders of Howdy, so you'll get to know them a little bit in this. Howdy created this very unique approach to something that most people truly love, and it's joyful ice cream. But also did this where it's creating a joyful experience for not just the clients, but also the members alike, because it's changing the way people see adults who might have an intellectual or developmental disability, where restaurants and novelty shops, any of these retail shops struggle with turnover, customer service, excellence just in the frontline work. Howdy solved all of this by having employees who are otherwise passed over, but are extremely capable and continue to learn and grow. Howdy has zero turnover. People are joyful when you walk in. They give you really great customer service. They don't complain about hours, nights, weekends. They don't ask for more wages. In many cases, you can't even pay them more wages because of the limitations of Medicaid and Social Security. And quite honestly, it makes you smile when one of these folks comes in and says, Howdy, can I give you a free sample? Tom and Margaret launched this 10 years ago, and it's a for-profit, mission-driven organization with unforgettable service and award-winning ice cream. The ice cream, you'll see all the awards in a minute. They came to us looking to grow, and through a long process, we said, this is the one, let's get fully involved. So we became minority owners and wrapped around and became 85% of the executive team. But what they saw in us is a little of what I teased out earlier, this track record, what Aaron's talking about, expertise, being mission oriented, having strategic relationships, not just in Dallas, Fort Worth, but all throughout the United States, and a commitment to growth. So right now, we're raising $3 million, and we are going to rapidly expand the model of company-owned stores and catering that we already have. And we're going to take a pause, perhaps permanently, on the franchising. We really want to control this brand and not lead to any mission creep, because we truly believe that if you optimize all the different components of the business part and you amplify the mission part and combine that with a great product, we can build something that is a chance to both do good, right, in the world, do good in the world, but also do well for every person in our equity stack. And by 2030, we will be employing more than 1,000 adults at the same time who have special needs. And I'm so excited. I think we'll get there faster, Aaron. So why this business? This is a business with a purpose. I go to sleep at night thinking, oh my gosh, look how cool today was. I solved really hard problems. We faced whatever the next issue was, but we're high-fiving because the work has purpose. I'll also say this, my friends who have children that are adults with special needs, or in the case of my niece, none of them want this to be a subpar product. This has to be not a handout or a charity. This needs to be a great product that even the ice cream you're coming back for. And let me tell you, they do all the time. One taste of Howdy, the creaminess of a super premium brand, and you've had some of these before, brings you back. I've talked a little bit about the business model advantages. There's more that I didn't share, right? The labor force is huge. We've conquered that. The niche that says this brand has an emotional appeal, that's very unique. And then the ability to go deep within a market so that your brand means something and that the Howdy Way becomes a really neat part of the context is just where we're headed. We'll talk more in a minute, but there are so many national brands and local brands who show up and align themselves with Howdy. Some of the biggest names in airlines, consulting, food distribution. People just want to do any part that they can to support this. And then you see the gift economy in action. Even when friends found out that I was involved in this, I had site selection experts. We had people that do restaurant and retail supply build outs, and we've had lawyers and all sorts of people show up just to work for free and be on this team. The time a year ago when our shop got broken into before I was involved, we made more money getting broken into and having our stuff stolen than selling ice cream that week because so many people showed up and gave checks. And it was really neat. It's a for-profit company, but people came and fixed the glass, brought a safe, bolted it to the ground, and gave us money. We have raving fans. We've started in some of our locations a Hero fan club. This is a subscription. You pay your money, $20 a month for your pint of ice cream. Most people never get the ice cream. They just want to support the growth. And so that is just revenue to the bottom line so that we can hire and grow more of this great
Love
mission.
the recurring revenue component. That's our business as well.
Well, and you do it well. One of the things that is being launched as we speak is a program for corporate and break room birthday parties every month. So
Oh,
a
nice.
subscription where you get your ice cream cake and your different boxes, party packs of pre-scooped ice cream, and it connects you back to the heroes because it'll be delivered every month by one of our heroes, one of the folks with special needs, along with another one of the team members. So it's that monthly reminder too. And you're going to have the birthday party anyways. Why not? You have the ice cream from Howdy. So in a disconnected world, in a world of AI, I got 7 kids. I know what it means to say we're stopping for ice cream. And then we have built the ice cream dream team. We couldn't do this without the founders. They couldn't do it without us. And we are a group of amazing people serving amazing ice cream. That's the name of the game for Howdy. This is just a quick snapshot. Howdy continues to win awards. Employer of the Year from the Down Syndrome Congress 2025 continues to win awards for the ice cream flavor itself and appearing on national and local news. And that's how a lot of people get wind of what's happening. In fact, Jake Berger, the first baseman for the Texas Rangers, is the only MLB player to have a son or daughter with Down syndrome. Loves the organization so much. He had us come out on a special night and catered that we would do ice cream for all the players and all of their family members. He even changed his number to 21 to recognize the 21 chromosome.
That's
Get
amazing.
this. The founder started a flavor called Dr. Pepper chocolate chip. And when Dr. Pepper found out about it, instead of the cease and desist letter and the term, the lawyers,
Yep.
they said, let's get our marketing team involved. They branded this entire flavor and then bought a high-end ice cream scoop or a ice cream mixer so that we could have the best product in the land. So pretty neat the way that works. And then example after example of celebrities and people like the man from The Prophet showing up and just supporting Howdy with their name, with their money, with surprised investments or donations. This was just a donation, even though it's not 501c3, that was done on live national television.
So let me hit this slide, Jeff, and then
Please.
we'll just leave that up, and then there's a waterfall outlook, and then we'll take any questions, and then we're at the top of the hour. We'll call it a day. So this investment structure, this is into an LLC. Is that correct?
Correct.
So it would be membership units in an LLC that equates to 10% ownership in that holding entity, if you will. You can use a self-directed IRA or solo K. Here's how that process works. First, you got to have an account. Second, you got to have money in the account. Third, you're going to do either one of two things depending upon the type of account you have with this. If it is anything other than a checkbook IRA LLC or a solo 401k, we're going to process that investment. That means the investment paperwork is going to come to us. We're going to review it. You're going to sign and authorize off on it. We're going to sign and authorize off on it. And you're going to instruct us in those forms where to send the money to. It's already predetermined in the investment docs, but you have to sign and approve that, telling us that it's okay to send those funds to the bank account associated with this investment. And so it'll have us, all the information, operating agreement, the structure of the organization. That's like the investment stack. And we send, there's a direction of investment form. So when you're logged in that portal that Nate showed, you're going to, click on small business or startup or LLC, and that's what you're going to begin the process. So we have a form that's authorizing that investment, that's going to accompany those investment documents that's provided by, in this case, Jeff and his team, if you're interested in that opportunity. And so that is a direct investment. So what we'll own and invest in that, in this case, would be directed trust company, FBO, Aaron Halderman, Roth IRA. That's what will be making the investment. That's what will be on the investment docs. The money in my IRA account at directed trust company will then be sent to the bank account according to the investment authorization instructions provided in the investment docs. That's one way. The other way is if you have a checkbook IRA LLC or a solo 401k, the investment docs are going to go straight to you. You're going to sign off on it, and you're going to send the money from your business or trustee managed checking account accordingly. And then at the end of each year, you're going to complete a fair market valuation form telling us you invested in this particular LLC. And that's how that works. So those are the two structures and strategies. If you need help with that, we're going to help with the IRA. If this is something you're doing, then we'll be instructed by Jeff and his team, and you're going to complete the investment authorization form, and we're going to need those accompanying documents. So you can see here, typically when people are out doing capital raises, there's investment minimums, sometimes investment maximums. You can see that up on the screen there. Minimum of 10K, maximum of 600K. They have their valuation, how they're doing fees, the governance, the ownership, any future liquidity opportunities. Jeff, you want to flip to the next slide on the waterfall outlook?
You bet.
A lot of times what will happen too is they'll give different scenarios and structures, because again, this is our retirement account. This typically is a long-term investment that we're looking at. This isn't something that is providing liquidity. It's illiquid for a certain number of time. Some of them, may have a specific exit in mind. Others may have dividends that they're looking forward to in the future. But this is why this is important when you look at a waterfall of what the potential exits and returns are, and that'll be also accompanied in any investment document that has the thesis or summary accompanying it. So these are all important things that as owners, investors, retirement account holders, that we need to look for is like, okay, great, love the investment. Now how am I making money on this, and what does that look like, and when would I be making money, and what kind of return can I expect? And that's why this is a critical piece to look at the different scenarios and what that would look like. Nate, do you have any comments?
Yeah, I'll just add this because I know there's a lot of new people. I always get this question. They think when they're self-directing their IRA that they move money to us and then we just hand the money to them and they do the investment.
No.
What Aaron just described is an exchange of an asset of cash in your IRA for an investment into a private company. Now, once the investment's funded, we'll retain copies of all the documents. So we'll hold the operating agreement. We'll hold the private placement memorandum. That's, if case we're audited, we show the IRS, this is what Aaron Halderman's IRA owns. It's no different than Fidelity holding stock certificates. So the investment comes straight from the IRA, and then when income comes in, the income comes back to the IRA. And all that income is either tax deferred or tax free, depending on the type of IRA that you used.
I'll say if you, Jeff, why don't you throw up the contact slide? So I got a lot of detailed questions coming in. So if you want to connect with Jeff, that's his direct contact information. If you want to do additional due diligence, you can see his LinkedIn profile, the different websites he's running. I'm sure he'd be happy to answer any questions you may have. I got a lot of questions coming in on the valuation that was showed in the slide, the different percentages. All those are going to be questions that we're not going to address today. Please contact and connect with Jeff. Again, this is not, an endorsement or recommendation by any means. This is about us sharing opportunities of what's available that you can invest in with a self-directed IRA or solo K, what you should look for in due diligence, learning about the people that are involved. And that's why we get excited. Our founder and CEO, Matt Sorensen, our co-founder, Mark J. Kohler, we're always looking for people that are doing unique and great things, that have cool backgrounds and, are willing to share their successes and failures and appear to be good operators. And so we're always looking for opportunities, and we can share that forward with each of you. Jeff, what comments do you have? And we'll rapid fire any questions. We're just kind of hanging out, but we're kind of at the top of the hour here, but we'll kind of cut the recording and then stay on any questions people may have. But what final comments or things would you like to share with everyone before we end today?
I think I would share two things. Number one, this is truly a moment to dive in deeper if this is interesting. And like you've been planning for all these types of opportunities, figure out whether or not you feel that belief in the founders and in the operators, because that's a little bit why we share the story of all these different award-winning organizations. I don't care about the awards. Those are just the beacons that talk about the inner truth of what it means to keep running organizations to scale and beyond. And that's what we're doing. That's what we're about. We're never going to leave the mission of what Howdy is about. And that's also why we're not trying to position this as a moment of exit. There will be enough liquidity when we get past year 5 that people will be able to get in and out of positions within Howdy. But I told somebody yesterday, he was the sandwich. He was the guy in between that was skeptical. The morning and the afternoon both made a pretty significant investment. The sandwich in the middle of the meat, he was very skeptical. And he said, I don't know what to do with this. And I said, don't worry about it. Just come buy me an ice cream when I open the 100th store. And we shook on it. So this isn't for everybody, but it's for somebody. I appreciate y'all listening. Thank y'all.
Absolutely. Thanks, Jeff, for being on. I love entrepreneurs, small business owners, good operators, and the opportunity to do due diligence on it. There's a lot of stuff out there in the marketplace of not so good operators, and they have these. We just get inundated with stuff on social media, and really great looking brochures of investments, and it's a little exhausting, can be a little misleading. And so, we feel like a great responsibility to bring other guests on that we feel have the potential to be good operators or are good operators, and share some of their successes and allow you the opportunity to do diligence. It puts us in a little bit of a pickle because our whole mantra is invest in what you know and take control of your retirement account. We're not recommending things or telling you what to do or have a marketplace, so to speak. So our whole goal is to provide good education and information and let you make the decision accordingly, and have a good time in doing that. And that hit. If you haven't read the book E-Myth, that's written by Michael Gerber, it's a great book that talks about the successes and failures of small businesses and entrepreneurship, and talking about operators. And, it gives very specific examples of the percent of small businesses that fail within 5 years, and then another percent of those that fail within the next 5 years after that. And there's just countless case studies and citations and information that surround that. It's not information you just made up, but it's a critical piece to look at, because if you look at those stats and data, those percentages of successes and failures, the failures in particular, pretty dang high. So that means it makes it all the more important to us to look at, when we're self-directing to who's behind it and who's operating it. We have no control in the markets. I know that's why a lot of people are like, man, I'm just going to stick on the S&P 500 and just kind of roll. But for those of you that, want to take control, diversify a little bit, be in control of your own destiny, invest in both hard assets and other small businesses that, may have hard assets included in that, is something else you can look at the investment perspectives, then this may be what's right for you. Well, what else? Should we kill it? That would be the wrong word for it. Yeah. Should we take any questions? We'll see if we have any good ones. Let me see. Okay, I got it. Here's what we're going to do. If you are ready to open an account and have questions, go ahead and book a call with us. We have plenty of senior account executives. Their calendars are open on our site. You can pick a day, Monday through Friday, that works for you. It's a 15-minute call for you to come prepared with any IRA, solo K questions. We will help you determine which account may be best for you, talk about where your money is currently at that's going to fund that account, and we will facilitate that process with you. You're not alone. Your advisor doesn't need to do it for you. We will help and assist you in that. If you're wanting more information on what Jeff's doing and his partner Nick with their small and medium-sized business investment opportunities, please contact him directly. We'd love to hear any success stories in doing that. I'll share some of mine, and we, of course, had some clients that did the investment. That's how I even heard about it, even though Jeff and I have known each other a long time. So it's funny how the world comes full circle and what we have to offer. Want to appreciate everybody for tuning in. I guess we'll see you, next Tuesday? Same bat time? Same bat hour?
Every week.
It'll be good. Thanks, everyone, for being on. Appreciate you, Jeff.
Thanks, everybody. Thanks, Jeff.
Thank you.